What's going on, guys? This is Lior and welcome back to my channel. Now, what I thought I would do in this video is talk about some due diligence items that I think you should do if you're considering investing into a new development deal. Now, I'll talk about this from both a condo and apartment perspective, right? But basically, if you're someone that's like, hey, I want new construction exposure within my portfolio, right? And I'm thinking about investing maybe in some local projects, or maybe you're thinking about going and investing in some national projects, right? There may be some sort of intermediary, right? These are the things that I would think about before I actually deploy my capital. So I'm gonna run through this list, and hopefully whether you're an investor looking to deploy capital or someone that wants to be a developer as well, this will help you out. So with that, let's get at it. What's going on, guys? My name is Lior and welcome back to my channel. Now, as I said, before I get into the meat and potatoes of the video, two super quick things, guys. Number one, if this is your first time on my channel, first of all, welcome. Second of all, make sure you smash that subscribe button for me. I put out videos on this channel every single week talking about everything from multifamily investing to new development and construction, right? I do both. I buy existing apartment buildings. I also develop, brand new construction. So if that's the kind of content you're looking for, make sure you subscribe. So with that, let's jump right into it, right? And one of the things I'll say before we actually get into these buckets is the reason I'm doing this video is because I've been raising some funds for some of my own development projects, and a lot of these are the questions that I like to talk through with my own investors before they invest, right? Because I want to make sure they feel comfortable in. So what I thought I would do is literally break down some of the things that I've talked to with people in my network, and literally create a checklist for you guys that are watching that, if you're considering investing into someone else's deal, locally, nationally, whatever it might be, this could be a good place to start and start doing your homework on. So I've got my list here. We're gonna jump into it. And category number one right here, that the first thing you really want to think about is the business strategy and market behind the project. And what I mean is a couple of things. So first, obviously, you want to figure out, okay, like what's going on with this project? Are we doing apartments? Are we doing condos? And then you want to start thinking about how does this project position itself within the local neighborhood, right? Is this going to be in line with other properties that are already new construction properties that are already online, right? Like for example, if this is a condo project and you're going to be doing luxury condos, have there been luxury condo projects in this market that are proven, that have sold, and it's already a proven concept? Or is this kind of like a pioneer project where you're going into a brand new area, no one's really done for sale development, luxury development, for example, and this is going to be the first one, right? It's two different stories. Same thing even with apartments, right? Like, is this going to be one of the first luxury new construction apartment offering within a certain neighborhood or a city, or is there already proven luxury product with proven rents in place, right? And one of the best examples I can give about this is, there's a local neighborhood not too far away from me here in Boston where I remember a couple of years ago, it was kind of unproven, right? I mean, the most new development activity that this pocket had was like 2 small townhome projects. That was like 2 to 4 units, nothing substantial, right? And then I remember a developer proposing a very big apartment building development. And a lot of the talk, I remember like even thinking through myself is like, obviously it's great, it's a growing neighborhood and there's a lot of things that point towards its growth. But as that first project in, you're kind of shooting against unproven rents, right? I mean, there's not proven rents within that neighborhood, within that city that show what someone would actually be willing to pay, right? So, you want to make sure you really understand that landscape within that city. If it's super local, maybe even with that neighborhood, right? Because again, maybe you want to be a pioneer, maybe not, but you have to understand how is this project getting positioned. And then similarly to kind of at a high level, you want to understand if it's an apartment development project, what's the long-term strategy, right? Like, is this something that is going to be built, leased out, and then sold within a couple of years? Is this going to be built leased out and then held on to for as a true long-term hold, maybe 5, 10, 15 plus years, right? And if so, how does the pipeline look behind it, right? Like, are there other projects that are, being talked about? Is this going to be the only one, right? Because you want to try to think as much as you can about the project's long-term competitive positioning if you're going to be invested in this project over a long period of time. Now, look, obviously you can't predict everything, right? Like there's no way you can tell if someone's going to put a proposal right after you build yours or whatever. But again, try to understand try to see if there's any sort of data or talks about other projects that might be coming online behind yours, and to get a better feel of how is it going to be positioned within the marketplace. Number 2 thing you want to start to do your due diligence on is layouts and amenities. So layouts, I think, is super important. And with layouts, I refer to not only layouts, but unit mix, right? So first of all, what kind of units is this project delivering, right? Like, are we, and who's really the target customer, right? I think that's really important, right? So let's think about it. Are we delivering, studios and smaller 1-bedrooms, right? To maybe target single folks? Are we delivering maybe mainly 2 beds and 3 beds, where we're gonna try to provide larger units, maybe more established professionals, maybe we're gonna try to target families, right? But how does this fit into the market, and how are we trying to attract the right type of customer at the end of the day, right? Because one of the things I've heard and that really resonates with me, I remember listening to a bigger developer, is, a mistake that he thinks a lot of people do is you kind of build and try to please everyone, right? And I think that's really difficult, right? Like at the end of the day, you need to figure out who and what is this project really trying to attract, right? Like, are you trying to attract young professionals? Again, maybe their first or second jobs, probably don't have significant others, definitely don't have kids, and you can deliver them smaller units? Or are you, is this more of an established neighborhood where you're trying to target younger families potentially, or maybe empty nesters, right? Because you're right in the city, right? So you want to try to get pretty specific about that clientele, and then really figure out, does the unit mix match with that? And then similarly to layouts, right? So layouts is another kind of part of, are we providing the right layouts for the type of people we want, right? Now, I think this can get a little micro, right? But for example, if we are doing an apartment project, right? And let's say we want to deliver a 2 or 3 bedroom, how do the bedroom sizes compare? How does the living space compare, right? Do we have things like work from home spaces if we're potentially targeting professionals? Now, if this is a condo project, you're going to be thinking about layout completely differently, right? You're probably going to want nice, large living spaces, potentially even dining spaces if you can fit them in. You're gonna be thinking about other factors if it's a for sale development rather than an apartment development. Other things you're going to try to think about is when you're targeting families versus professionals, you're going to think about, okay, well, like how does the bedroom layout, how do the bedrooms lay out, where do the kids go, where do the parents work from home, right? These are all critical things you really want to try to flush out, again, to make sure you're targeting your target clientele correctly. And then finally, amenities. Amenities is obviously super important. I consider everything in amenities, from parking, right? Like, how does this compare for the neighborhood? Does the project need it? Does the area require it? Are you close to transportation where if someone's working downtown, they can hop on the train, right? So again, you really want to think through parking. Obviously, always a very big deal in basically every project, right? I don't even want to say urban project. Always a huge thing, but you really want to think through, how does the parking structure kind of mesh with who you're trying to target? And then, more traditional amenities, right? Outdoor space, common amenities like decks versus outdoors, maybe roof decks or yards or grills, whatever, right? But basically, you want to understand what kind of amenity packages are you offering? How does it compare versus the competition? What do you need to offer? What's important, right? These are all questions you 100% want to be asking. Next category I want to talk about is zoning and permitting, right? So, obviously if you're about to invest in a project that's like shovel ready, maybe this is not as relevant, but if it's something that's a little bit in the earlier stages, right? we want to think about what is the zoning with this parcel, and does it allow for the density / unit count that maybe you're seeing a pro forma for, right? Is it already approved by the city? Is it a by right project, or does it need a rezoning? Does it need some sort of variance, right? Like how does that sit, and what is the process, right? Because obviously, if it's not by right, if it's not already approved, then you got to really think about the risk profile. Well, okay, like what happens if we don't get the density or the unit count that we think we can? Again, so you want to think about, is there additional relief that's required? If additional relief is needed, how far along in the process is this project in when you're currently going to be investing in? So all these things are really, really critical to understand. And then finally, from a building permit perspective, you want to understand how far along is that process. Getting your building permit is not a simple feat, especially for larger multifamily developments, and especially if you're dealing with larger urban municipalities. So you want to understand, where's the project in that? Is it literally shovel ready, permits ready to be pulled? Are there things that still need to be ironed out with the city? How long can that take? Because obviously that's going to impact holding costs. Again, so you want to think about, is there additional relief that's required? If additional relief is needed, how far along in the process is this project in when you're currently going to be investing in? So all these things are really, really critical to understand. And then finally, from a building permit perspective, you want to understand how far along is that process. Getting your building permit is not a simple feat, especially for larger multifamily developments, and especially if you're dealing with larger urban municipalities. So you want to understand, where's the project in that? Is it literally shovel ready, permits ready to be pulled? Are there things that still need to be ironed out with the city? How long can that take? Because obviously that's going to impact holding costs. So you really want to try to understand, where is the project at its current moment when you're going to be investing your funds into it. The next category you want to think about is debt, right? And again, obviously if debt's secured and funded, that's great. You still want to evaluate and understand what kind of debt has been secured here, right? So if it hasn't been secured, then what's the status of it? If it has been secured, great. What does the debt look like for the project? Is it local community debt? Is it some sort of like bridge debt or hard money? Obviously, you want to understand the basic terms behind it. Loan to value, loan to cost, interest rates, period. Like what the term is, interest rates, what the term of the note is, what the cost is, right? Are there points on it? And then on the construction portion, you want to understand, is the developer or the sponsor going to be putting the first amount of equity into the project in construction dollars before the actual construction loan can be tapped into? If so, what is that cash requirement, right? So again, you just want to understand what the mechanics of the debt are. Probably the biggest things in today's environment. Obviously, you want to be thinking about rates. Is the debt fixed? Is it floating? A lot of construction debt obviously tends to be floating. Term is very important, because you want to make sure that there's enough runway within the note to make that you can finish the construction and either sell out or stabilization of the property, so you can get out of this construction debt. So all of these are really important to understand, just so again you're comfortable that there's no ticking time bomb waiting for you on the other side. Next thing you want to think about is construction logistics, right? So at a high level, you want to understand, who is the GP or sponsor here, right? And what is their experience with development, right? Like, if it's a luxury development play, do they have experience with this? Has the sponsor or developer operated in this particular city, in this particular market? Do they have experience working with the municipalities here, right? Because obviously, especially in urban, in dense urban environments, different municipalities can be sometimes not super easy to work with, right? I mean, and you do want someone that's experienced, that can figure out how to smooth out difficult situations. That's very, very important. You want to think about, is construction in-house, or is it a third-party construction group? Like, are they hiring a third-party GC? If you are, who is this GC, and how does this GC's book of experience look like in this market? Similar questions, right? Have they built this kind of product type? Have they operated in this particular city? Have they worked with this particular city? Again, the more experience the builder and the developer have in this particular city and done similar types of product, the more probably comfort you can expect, right? Because they've already gone through the ringer, they know what to expect from working with this particular municipalities. Other things, depending on the scale and size of the project, maybe you want to think about, will there be project managers or who are the people involved in the construction that will help oversee the logistics, right? Because at the end of the day, it's all about execution. That's very, very critical. So you really want to understand who's involved and who's going to be making sure that things are rolling along smoothly. Next thing you want to think about is back-end valuation, right? And with back-end valuation, you want to think about how is the valuation analysis done, right? First of all, what kind of comps are being used to justify the back-end rents if this is an apartment development, right? Are they in similar locations? Any major differences between things like amenities like transportation, right? So for example, in Boston, right, a building that's a lot closer, even in the same neighborhood or city, but if one building's a lot closer, for example, to the subway, probably gonna get premiums, right? Because people will jump on the subway, go right into the city to work, and boom, that's a huge convenience factor, right? Are you comparing similar quality product? Right? Is this, is one product ultra high-end luxury versus not? Are you pulling comps from like apartment buildings versus maybe condo buildings where individual owners are renting out their own maybe higher end condos? So you want to make sure you're not, you want to make sure at the end of the day you're comparing apples to apples, right? That's really important. Building amenities, you want to compare, make sure you're not missing anything. So again, things like parking, storage, outdoor space, private decks, common decks, right? Again, you want to make sure that you're comparing a similar type of product. Year built is obviously important, right? If you're building brand new construction, you probably want to come to newer construction products as opposed to maybe 80s, 90s, 2000s product, right? That's going to have different sorts of premiums behind it. Finally, for the back end, you want to think about what kind of cap rates are being used for the valuation, right? How do they compare to new construction versus not new construction? How is this cap rate being used in the calculation compare from this neighborhood to maybe other neighborhoods? Again, this is getting very, very micro to specific neighborhoods, specific types of buildings. But again, you want to make sure you have a really good grasp because obviously a lot of sensitivity behind the cap rate. And then the final bucket that I kind of threw together was a financial analysis bucket, right? And there's just a couple of different points that, again, at a high level, I would start to think about. First, is there GP? What's the GP and LP alignment here, right? So what's the alignment? Is the developer taking fees up front? Is he taking fees during the construction? Is he mainly just participating as equity? Is he rolling in his equity requirement through fees? Are they actually putting cash into the deal? Those are all very important. Those are very important questions. You want to see how much equity the sponsor is putting in. Is it something like a common 90-10 split? Again, is it being funded by the developer in cash outside of their fees? Is it being funded through fees, right? Because again, you want to make sure that, the developer and sponsor has their money involved in the deal, right? Because you want to make sure that they're just as motivated to, if there's anything that goes wrong, to save their cash that's already getting invested into the deal. So some return metrics, probably the biggest one of the biggest ones at least that we look at for development, yield on cost. You want to see what this metric is to see if it's worth going through the risk, the brain damage, the stress of a development deal versus just purchasing an existing building, right? Because you want to make sure that by going through this development process, you're creating enough spread through this process to warrant going through this whole, this ton of work, quite honestly, right? So, yield on cost is a big metric that I kind of use as a high-level filter right up front just to see how that's penciling out. And then finally, as LPs, of course, you can look at standard metrics like IRR, equity multiple, cash on cash. But special things you want to pay attention to. Is there a pref on the equity? Does it accrue during the construction period? Do cash flows cover the pref post stabilization, or does that pref continue to accrue a little bit afterwards? Not super uncommon, if especially with today's interest rate environment, if stabilized cash flows don't cover the full pref. But again, you just want to understand, how do those cash flows look like? How do they compare versus the pref? That's really, really important. And then kind of like we talked about before with the back-end analysis, what is the projected exit or recapitalization event look like? And how much, if there's going to be a refinance, how much equity can be potentially pulled out? So again, I know we went through a lot of details, but at a high level, these are the things you want to just start to get comfortable with if you're truly going to be evaluating a project, just to kind of get a sense of everything from competitive positioning to logistics to execution to financing, ultimately valuations, and then return metrics, right? Those are the high-level questions I would be going through thinking about if I was going to be deploying my own capital into someone else's development deal. So I know this was extensive, but hopefully it's helpful. Hopefully this gives you guys plenty of bullets to work with. Of course, if you guys have any questions, make sure you put them in the comments below, and I will definitely help you out.